which is the final section, is a little bit of a review. You've done this before, just not to this magnitude. But basically, the post-closing trial balance is everything that we did not close. When you get into the application problems, you're going to deal with some posting, which should be a review at this juncture. But when you do that, you're going to be adjusting and then closing accounts. So everything that's still open is what you'll put on the post-closing trial balance, which I'll put together a review video for 16.4 and 16.5 applications. But anyway, given to you in the book on page 498, December 31st Visual Arts Center's balance sheet accounts in adjusting and closing entries. After adjusting and closing entries. So, Visual Arts Center, post-closing trial balance, December 31st, 2014. All of these accounts are listed in the book. So, literally, you can start with cash and go all the way down to retained earnings. I have not changed one thing. You will notice I haven't changed a number. Okay? The only thing you have to know is where do the numbers belong. Is it a debit or is it a credit? Okay, well, cash is an asset, so we know it goes in the debit. Petty cash is an asset, we know it goes in the debit. Accounts receivable is an asset, goes in the debit. Merchandise inventory is an asset, so therefore it goes in there. Supplies, office, and store are assets, and then prepaid insurance is an asset. Then we get into these payables, and we have a little bit of a shift to the credit side because we're dealing with liabilities. So accounts payable and sales tax payable are credits. Capital stock is a credit. And retained earnings, 98% of the time is going to be a credit. I can't even think of a time where it wouldn't be for you. Therefore, we get to the bottom, we type in totals, and we total these up. They should always balance. Okay, your debits should always equal your credits. In this situation, it's $227,101 for our debit and our credit, and we highlight them. I'm actually going to show you 16.3 because they're not very nice to you and they do some things in there that they didn't do in the work together. So, the on your own welding supply post-closing trial balance, December 31st. Again, all of these accounts are listed. Just I took them strictly out of the book. Okay, cash, petty cash, accounts receivable are all assets, so they're going to be debited. Allowance for uncollectible accounts is a credit. And that one always throws people for a loop. Merchandise inventory, supplies, prepaid insurance, and equipment are all debits. Then we come to accumulated depreciation equipment. That is a credit. Accounts payable is a credit. Federal income tax payable, sales tax payable, dividends payable are all credits. Capital stock and retained earnings are credits. Your totals on that should be $203,852. That's the post-closing trial balance. Again, should be a review. You just have to kind of keep it to the basics that you're going to know your debits and credits for those accounts.